the market never repeats itself exactly. It's different every single time. You know, you get an idea off past data, you know, but every single period, you know, you see these people that have been in the markets for 50 years, like, we've seen this before, you know, that type of thing. It's a lot of screen time and perseverance and patience. You know, you just have to have patience and greatly drop your expectations down.
I don't think the market ever changes. When you look at a price chart, you know, you think it's a reflection of, you know, something taking place in computers, some mysterious connection of servers all over the world. That's not what it is. It's simply mapping out human behavior. And if you and I were alive 5,000 years ago and you shot a deer and I had a bunch of chickens with eggs and I wanted some deer meat, I'd give you some eggs. And so if the eggs are currency and the deer meat is the commodity, we could plot it out. And if you took a whole bunch of people making that kind of barter, the price charts would look very similar to price charts today for any stock, for any commodity, for futures market, which is what I do most of my trading on. It's just a reflection of natural human behavior, rational human behavior. And that's not going to change. It's genetic. It's built in our genes. And if you start to get thousands of people together behaving rationally, or at least the people with big money will make rational decisions, and you look at the charts, it's simply a reflection of natural, just normal, rational human behavior. And the computers obviously are going to be rational. You know, most of the trading that takes place is done by computers, at least in the United States, and they obviously are behaving logically. And so the patterns that we see right now are a reflection of computer trading for the most part, and you have to assume that it's all logical. And yes, sometimes it can result in big moves, sometimes it can result in sideways moves, but it's all a reflection of rational human behavior. It's just a mapping out of how transactions take place. And it's not going to change over time unless we become a new species. You know, it's in our genes. It's always going to be that way. I've looked at charts from over 100 years ago, and if I take the time and price off the charts, they look the same as charts today. Even today, I look at charts from all kinds of markets. And if you take the time and price off the chart, you cannot tell if you're trading gold, if you're trading stocks, if you're trading bonds. You cannot tell. So I trade all markets and all time frames the same.
Do I feel like a professional trader? No, I just feel really old.
Wow.
I really just feel really old and tired, really, most of the time. I'm joking, but no, I don't believe in the word professional trader. I really don't, because I think that when you assume you're a professional trader, it implies that you've arrived and you've achieved something. And I think that is, every time I thought I knew what I was doing, every time I thought, I got it, I understand this, I ended up blowing an account like shortly afterwards. And I'd be like sitting there saying, I thought I had this.
Especially when traders come home after a tough day where things didn't go so well, boss was not really nice, they had a cranky customer, they come to the trading screen and are overly eager to trade because that feels good. You know, finally they don't have to deal with people anymore, they can just be with a screen, and they want to get this feel-good feeling. And so, like, you know, like when someone has a craving for a beer or craving for chocolate or is super, super hungry, and then they start eating really fast. That's what we do as well with trading. So make sure that your emotional needs your emotional buckets, the silos, are filled before you go to trading, that you do something that makes you happy before you get to the trading screen. To start off with, when you have that, completely accept where you're at. Accept where you're at and be honest with yourself. Be honest with where you're a great trader, where you suck as a trader, where you're a great human being, and where you suck as a human being. Now, we are not always perfect. We are not black or white. We are all different shades of beingness. And then when you know your weaknesses and your strengths, from that place you can start building and start improving?
The one thing that really helped me was making time to trade, because sometimes, what happens is, like, when we go to the gym, we know we go to the gym at a specific time in the day. If you go to the gym in the morning, every morning you can go to the gym. With trading, when you start trading, there are three things you are told in the start. One thing is that it's a $5.2 trillion market. Or if you're in stocks, you're told it's an $80 billion market. Second thing is that it's open 24 hours a day, 5 days a week. The third thing is that you can make money at any time of the day. As a new trader, that sounds very appealing, right? Because then you're like, okay, you know what? There are so many ways to make money. But what I understood was that if I don't make a plan, and if I don't write down the right amount of times that I'm going to watch the markets, it's not going to work out for me. So for me, the one thing that really changed was that I figured out that, okay, if I'm going to go to my day job at, like, let's say after 9 a.m., which is almost half an hour before NYC open, if you're in the Eastern time frame, I would literally want to watch the markets from, let's say, 6:30 a.m. till 8:30 to 9 a.m. It's going to be your pre-New York. It's going to be just after lunch break at London. So that was the one thing that I really had to, key in my trading plan. So what started to happen was that once we start to trade during those 2-3 hours, we start to realize that every currency pair would have almost the same moves at the same time. Because let's say if you look at gold, right? So gold's going to have almost the same movements in pre-New York every day. Sometimes it's going to be presented for you in different variations, but if you look at gold in, let's say, after London close or before New York close, the volume is going to be so low that there's going to be no movement at all. That movement is going to be different than the one you're going to see in pre-New York. And if you look at gold in the Asian session, it's going to move way differently. Same thing goes if you look at gold in the London, it's going to move a lot more differently as well. So that was one of the main key factors of, like, having like a profitable outcome, was that to really knowing what's the time that you need to trade. Like, the one important thing is, like, they don't have a specific time they want to trade, right? Like, trade in the morning, they'll go to the grocery store, they'll open their app on the phone, they'll try to trade that, they'll go to the gym, they'll try to trade at the gym. That's like a very vicious cycle. Once you fall into that cycle, it's really hard to get out of. I think the time when I was really picking up momentum, my son was born, and I really saw that as a discipline thing, right? Because I knew that if I can stay disciplined and if I can just trade the first 2-3 hours of the day, that's all I had to do. Because essentially my whole motto is that if you can set those 2-3 hours in the day to trade part-time, maybe down the road, that part-time work can lead to a full-time income. And that actually made me transition from my job to full-time trading. And that full-time trading was just part-time work. So that really helped me a lot to just have a specific time to trade.
I have a very strict routine. I go to bed every night at 10 o'clock, right? I usually don't stay up later than 10 o'clock because I need about 8 hours sleep. And I'll wake up around 6 the next morning, and from 6 o'clock I literally will go and I'll drink the same thing every morning. I go down a big glass of water, squeeze a lemon in it, and I drink just a big glass of lemon water. I go back up, I basically do some stretches, some meditation, and then I turn my charts on, right? And once I'm in the right state of mind to be able to face the markets, realizing that I'm calm, I'm relaxed, I'm not anxious, I'm not overly tired, I get myself in a good state of mind, then I turn my charts on. And then I start to deal with all the information that comes in. And so by the time the market opens, Forex opens earlier than that, but usually there's 8:30 reports out. So if I get up at 6, I'm usually ready to go for those 8:30 reports to take advantage of that 8:30 report, give myself 2.5 hours to get ready. And I'm going to tell you something. If you just wake up, turn your charts on, you are in so much trouble. The emotion is just going to come in. So many things are going to start barraging you, and it's just going to be, and again, like the power of habit says, once you break that little habit, you're out of your routine. Now you're like a boxer who is now wrestling. You practiced all this boxing, but now you're wrestling and you're like, what do I do? Right? So it's really super, super important that you develop the right habits and routines. I'm a big, big, big believer in that.
You do something stupid and you lose more. And now, if I have a bad trade, I say to myself, in general, everything is going to be between 40 and 60%. The best setups, you win 60%. The worst setups, you win 40%. And that's pretty much true any time, all day long, at any instant, all day long. I know the math, and I'm comfortable with the math. And it took a long time to get comfortable with the math. So I know that if I just keep doing what's right, I'm going to win. So I don't worry if I lose. I don't worry if I lose twice in a row. I'm just confident that if I just keep doing what I'm doing and I don't get emotional, the math is on my side. It's like a casino, except that instead of me being the customer, I'm the house. They know that every now and then someone is going to win $10,000 in a slot machine, and they don't care because they know that the way the game is structured, the math favors them. Probability is going to favor them. They can win 51, 52, 53% of the time, but if they do it often enough, over time, they're going to grind out a consistent profit. And that's the same with traders. As long as you're structuring things correctly and you just keep executing properly, you can do very well.